Okay, hello, and welcome, and happy freaking New Year.
Yay!
Happy New Year, Amber.
Welcome to 2023. Happy New Year to you
Happy
too.
2023. We are so excited. It is a Wednesday evening. It is a cold Wednesday evening in Las Vegas.
Your favorite time.
I
You
hate
love
it.
this time.
I freaking hate it. But it's cold. It's been rainy. We're doing this at Amber's office in downtown Summerlin, lovely downtown Summerlin. And we're coming to you live today to talk about all the new best loans and loan limits and all the updates with the loans and stuff like that, and also some really rad free money programs that are out there.
It's a new one. You're going to be excited for this.
We've got some awesome stuff to talk about. So I want to just preface this by saying, if you are thinking about moving to Vegas or you've been considering investing in Vegas, now is the absolute perfect time to buy a house. Don't listen to the mainstream media. Listen to the people that are working in this industry every single freaking day. Now is the juiciest, most crunchy, amazing time to get yourself an absolute deal on your dream home. I won't harp on it because I do that a lot during these live streams because I want everybody to know. I want to scream it from the rooftops. We are so excited, though, because there's a lot of changes that have happened when it comes to buying a house here in Las Vegas.
And they're exciting changes.
And especially when it comes to loan limits. I'm here with the loan wizard herself.
Okay.
Oh, I got her costume.
Yes.
Merlin is here, the loan wizard herself. I'm going to have to move the camera. I'm going to make it go all the way up.
Should I turn sideways?
She's a loan. Yes. So the loan wizard herself is here today to talk to us about.
I'll wait to put on my wizard hat so I really need it.
Exactly. Okay? So we will not be covering every single free money program. I want to make sure you know that there's way too many for us to cover in today's live stream, but really we want to cover a couple of really cool new ones. We're going to talk about some awesome changes as it relates to some of the traditional loans, some things that you may need to know about with lowered credit scores and larger limits. And also we want to kind of debunk a few myths, although we have an upcoming live stream where we're going to be debunking a lot of myths, but a few myths about some of these loans, because a lot of people think you need a certain percentage down and you don't. So we're just here to do the work. Take care of it all tonight. We're doing the work tonight. You ready to work?
Let's do it.
Get that wizard. We need to get you a crystal ball too, right?
I think I have one.
Okay, we're gonna get her a crystal ball here in a second. But so Amber, first of all, Happy New Year. Thank you for joining me again on a weird Wednesday evening.
Yeah, no problem. Sorry about the traffic on the way here. The rain.
Louise.
The rain messes Vegas up all the time.
Don't even get me started. While we're talking, please consider dropping a question. If we can, we'll answer them towards the end. Drop a question in the comment box below. We'd love to answer your questions and give you a chance to kind of engage with us. But just know, if you have questions, we are here all the time. We would love to talk to you one-on-one. There's information in the description below of wherever you're watching this. So make sure that you take the time to say hi, click the link. It's easy. We won't pressure you to buy. We just want to answer your questions. We promise. Okay. So Amber,
let's get into it.
Let's jump right into this. I'm super stoked. Do you want to start with regular loans or free money? I think we should save free money.
You want to start with free money or save it for later?
I'm gonna make you guys wait. Sorry, I'm gonna make you wait. Okay. So let's talk loans. Okay, let's talk FHA.
I mean, regular loans are still exciting too. Like
they're really exciting
limits right
here. So when I bought my house at the end of 2000, was it 18 or 17? 17, 18.
I don't know, but I think that's when it was 289,000.
289 was the limit for FHA. That's the most you could get for the FHA loan. 289,500.
I think it was 2018 that you bought it.
2018. Talk to me about the new loan limit for FHA.
Okay, so the new loan limit, you ready for this? In Clark County, because remember, it depends on the county that you're in, is the loan limit. $494,500. That used to be a jumbo. That used to be like the jumbo loan limit or pretty close to it. So now
they're allowing people to borrow on that federal program that allows you to put only 3% down.
3.5%.
3.5%, pardon me, 3.5% down. And a lot of times, guys, right now, especially, a lot of the sellers are helping to pay for some of those closing costs to free up that money to be for your down payment. But $494, that's ridiculous.
That's a lot. I mean, so the buying power is huge for you as buyers, right? Like it's huge. You guys, like, because it allows you to buy bigger, and we're going to go into conventional next, which is even better news.
Just wait.
But it allows you to buy bigger houses, which, you know, like if you have a growing family and stuff, it helps you. FHA keeps the rate down.
Nice.
And then, and it keeps your down payment down, so you don't need all that money to be able to come into.
Yeah, let's talk about some. So you just said a couple of the perks. Why would you go with an FHA loan? One of the biggest perks I see, and I put it on the screen here, is that they just recently lowered the FICO score requirement to a minimum of 540.
Yes. So, and I've done this before. So some people are like, well, that can't be done. No, I've done it before. Actually, a few times. So if you're down to a 540 FICO score, the requirement there is you have to put 10% down at 540. When you get up to a 580, then you can go to 3.5% down. but that opens up buying power to a lot of people.
Right.
I mean, we've talked about our baggage before, right?
Like we've all got baggage.
We've laid it out.
Divorces, bankruptcies, whatever,
foreclosures.
Right? Foreclosures, it's happened, right?
So we're a judge-free zone. So, some people are afraid to call because, oh, my credit, I just don't even want to look at it. No, let's see if we can fit you into one of these.
Well, I've seen you see somebody who had something maybe below the 540, and because of your assistance, within a month they were able to bump it up. Or I mean, it's really a miracle. When I say she's a wizard, I mean it. Oh, she's a wizard.
I got my hat right here to prove it.
So really, they've lowered the FICO score requirement. The perk now is that with that lower FICO score, and again, we want it to be 580 if you want to have the benefit of the 3.5% down payment. What are some of the cons to that people would maybe assume to an FHA loan?
Well, a lot of times people will think on an FHA loan, oh, I'm not going to get approved by the seller, right? They think there's a problem with the seller. That was in our old market, not this market, right?
No, sellers are not afraid of any loans at this moment in time. Yeah. And they used to be afraid because sometimes FHA appraisers can be a little sticky when it comes to walking through the house and making the seller fix things they don't want to fix to get the house to be appraised. So that can be an issue. That's not an issue right now. We're having no issue whatsoever. Actually, it's been great. FHA has been flying through with flying colors, getting approved and getting accepted by people who are the sellers now.
Beautiful loan program. So the other thing that people like, there's a negativity about FHA is mortgage insurance.
The PMI, they call it PMI, right?
So keep in mind, anytime you're putting down less than 20%, you're going to have some sort of PMI. Sometimes you can couple that into the rate, make the rate a little bit higher.
Right.
Sometimes you can pay it off, like we're not on an FHA loan. This is on conventional loans. But if your FICO scores are lower, a conventional loan, if your FICO scores are lower, there's no better loan than FHA.
Got it.
If you have higher FICO scores, then we kind of weigh the two and see which one works best for you.
Right.
But if you're lower, they don't discriminate because of credit score.
I love that.
So like 620 FICO score is going to be the same rate as like a 720 FICO score.
Nice.
So, I mean, that's the beauty of it. So if your credit scores are a little lower, if you're challenged a little bit.
The rate is the rate and the low down payment.
The mortgage insurance is the one that kind of sets people off.
But I'm just saying the FHA rate that they give and the way that they're working so closely with people who have lower FICO scores and the way they're working so closely with people who, who are able to maneuver through this type of a loan, and the fact that it's federally insured loan, everything's wonderful. Like FHA is amazing. Here's what people often say to me about FHA. It's only for first-time home buyers. Is that true?
They say that all the time.
You know why? Because it's FH, first-time home. People.
Oh, is that why? Yeah. It's not just for first-time home buyers, but they do couple the FHA loan with a lot of first-time home buyer programs. Nice. So like when you're looking at grants, most of the first-time home buyer grants are coupled with like FHA loans.
So that's where the confusion first-time home buyers loan. This can be for anyone. You can have as low as 540, but we want you to be at 580. Amber can help you through that. We are now allowing you to spend up to $494,000. When I bought my house, that was the jumbo loan limit.
Yes.
That's nuts to me.
That was, if it was 2018, that was only like a little over 4 years ago.
That's what I'm saying. It's nuts to me that it's progressed that quickly. And I'm so grateful too, right? The prices of our homes have gone up a bit. Not a ton. Honestly, our median home price is like in the middle 400. So it's not crazy. Yeah. But what's awesome is you can get a house, a beautiful home actually in Las Vegas right now with an FHA loan all the way up to 494 for only 3.5% down.
Yes.
That's freaking amazing.
I want to point out one more amazing thing about FHA loans is that their debt ratio requirements. So sometimes like if you have student loans, it's not debt that you're paying, but we have to count a payment against it, right? So your debt to income ratio goes higher. They allow you to go pretty high on those. Oh. So if you're wanting to stretch what you can qualify for, FHA is usually the way to do that.
I love it. So if you're thinking about buying a house, FHA might be the way to go. The good news for you is you don't need to make that decision. Amber here will help you make that decision.
That's what I'm here for.
She's here to help you look at all the scenarios that are involved with your case, whether it be your debt ratio, your income, your just all of it, and your FICO score, which plays into it largely. How much money do you want to put down? How much can we get out of the seller? All those things we work together on. FHA is an opportunity for you, and the fact that their loan limit is that high right now and their FICO score is that low, I'm actually.
I know when you're putting it on like that, I'm like, dang, that used to be jumbo not that long ago.
I love it. So that's number one. That's the first one we're going to talk about tonight. Let's move on to conventional loans. Before we put this on the screen, let me just say, a lot of people say to me, I'll never be able to qualify for a conventional loan. I don't have 20% down payment. I'm never going to be able to save that much money. It'll be 10 years before I can save 20% down payment. You don't need 20% down payment.
Wrong.
Let's talk about
needed.
it. Let's start with the conventional loan limits.
Look at that bad boy right there. 726,200. Now, I mean, obviously we haven't seen any numbers like that before.
No, no. But I would love to own a house that was worth $726,000.
You can get a beautiful house.
Those are McMansions. Those are mini McMansions here in Las Vegas.
Yes. And here's the beautiful thing about it being this high is typically in the past to get a house that was in the 700,000s, you would have to put a sum of money down on it to get it down below jumbo.
A good sum of money down. You'd have to have that mattress money, or grandma passes away, inheritance type money.
Yeah, or jumbo. Sorry, I know, right? Or jumbo would be like, more money down, right? So conventional means that you can do 3% down, minimum 3% down. They have 3%, 5%, 15%, 10%, 20%, whatever you want to do. Actually, you can work this in your favor. So 3% down.
3% down on $726,000 home with as low as a 620 FICO. Now, is that going to get you the 3% down at the 620, or are they going to require the FICO to go up like they did with
No,
FHA?
You can do a 620 FICO getting 3%. Just keep in mind on conventional, their rates are determined based off your FICO score. So if you're at a 620, it's a higher interest rate and a higher payment, but you can absolutely do it. The good thing about it too is that the 3%, you could actually get that gifted.
Oh,
so like a family member could gift that money to you.
Well, who has a rich family member that's single that wants to introduce me to them? That's what I want to know. I'm just kidding. So really good news. So what are some other perks? So you can be gifted your down payment up to 3% or the entire thing?
You can be gifted the entire thing.
You can get gifted. You can have as low as 620. You can decide with Amber based on your situation. Do I want to put 3% down? Do I want to put 10% down? Do I want to put 20% down? But you're not required to hit any of those marks if you don't want to. There's availability through all of that, depending on your situation and your debt ratio, right? The 726 also is, to me, you guys, it's like a mini McMansion. It's double almost.
It is.
It's almost double what the median home price is here in Vegas. It's crazy. It's nuts. I'm just so excited.
Yeah, that's amazing.
All right, talk to me about. Oops, hold on one second. Let me put that away. Talk to me about your thoughts related to VA loans. I know VA loans are like one of the best things that you can receive. Thank you for your service. If you're someone who has the benefit of receiving a VA loan, let's talk about VA loans, because I think there's a lot of misconceptions about VA loans too, but what are some new things we need to know about VA?
Okay, so VA loans, they're one of the best loans out there.
Yeah.
So if you had any credit, so like, let's say you're a veteran, you already have a VA house, right? You bought your first house, it's a VA, you've outgrown it, and now you want to buy another one, but you're like, dang it, I don't have a VA eligibility, and I don't really want to sell this house because I can get a huge amount of rent on it. You can actually, this is a common misconception too. Some people think you can only do one VA loan.
I thought that until like last year. So yes, I thought you can only do one at a time.
You can actually do, depending on the entitlement. So, and the loan limits of the county. So when you're buying your first house VA, there's no limit. You could go buy $1 million property, no problems, right? As long as you can debt ratio, as long as you can qualify for it. When you're buying your second house VA, you have to fit the first and the second house in the VA county limits.
Oh, in the county limits. Okay.
Yeah, within the county limits. And then obviously you have to have the entitlement to be able to do it too, but you usually will.
Yeah.
So the VA county limits. So the VA county limits are now the same limits as conventional, which is that 726.
Let me just throw that one back up on the screen. So VA county limits, housing county limits are 726,200.
Yeah. So like, let's say you have a house right now that you own VA and you have $300,000 that you got financed on it, right? You now have available $426,200 to buy another house.
Then you start building your empire, is what we say.
Yes. And that's at 100% financing for both of them because they both fit within that county limit. But say you want to buy a house that's $500,000, there's a down payment required, but it's not as bad as what you would think it is.
All right.
Like, we just have to do the calculations on that.
So what I love about you, Amber, is that you have a tendency to, you're always, not even a tendency, you are always thinking outside the box, and not to knock other lenders, put your wizard hat on.
Yeah, I have a wizard hat.
A lot of other lenders, I love lenders, a lot of lenders in town. We've got beautiful lenders in town, but I have never, not once, not ever in my now 6 years of doing this ever. And honestly, my 10 years of buying houses prior to that, met a lender as creative and as bulldogish as you when it comes to making sure someone gets approved, making sure they're going to get the best deal possible, and making sure that you are finagling this puzzle piece to work for the client. It's never, you're never in the box.
But right? I like the wizard hat better than the bulldog.
Well, I know. And you know what? I bought her this too, which is still wrapped up. But I'm like,
fairy dust?
I'll be the real estate fairy. You can be the real estate wizard, or you can do, I don't know, maybe this will be your club. But with all that being said, you know, you're the only person that's ever been able to educate me and our clients about some of these unique, cool things related to VA loan. Did you know you could do this? Or conventional. It's not even just the new stuff we put on the screen. It's really getting creative about how to pair those with free money, with the first-time home buyer programs, with all these things. This girl knows how to layer a cake. I'll tell you that.
You feel all good. Thank you.
That's because you made us feel good. So if you're thinking, again, I'm going to say it again. If you're thinking about moving to Vegas, thinking about investing your home or your money into a home in Vegas, you're looking at Airbnb or something of that nature, please, for the love of criminy, call us. Click the link in the description below. Now is an incredible time. And I'm going to say for me, now through the first probably 6 months or 5 months of the year, my gut tells me, I know we've discussed quite a bit, that we really feel like with rates stabilizing, we hope, right? That we really feel like it's going to be an opportunity to continue to still get really good deals, because more buyers are going to start creeping down onto the market and becoming your competition as they see things calm down. While things are in the process of calming is your opportunity.
Yes. Yeah. In fact, I have seen, I don't know, like I just saw this today. I saw something come through today that some of the builders are already starting to clamp down on what they're giving for incentives. So
because they see it too, and frankly, they've probably been watching our live stream.
They're always the first. So if you buy a resale, then they haven't seen all that yet.
Absolutely. Okay, so VA's got some really cool new things that we're mixing into it. We wanted to let people know that you don't have to stick to the one. You can get two. It just has to fit within the calculation, which is amazing.
And VA has so many cool things about it. So like if you have something holding you back, but you have VA eligibility, don't.
And don't let another lender tell you what they think is only possible, because I'm going to promise you, we've had people come to us saying, well, my blah, 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 blah lender told me that my VA only allows me this. And we're like, what are they talking about? This, and this is available to you. So,
well, and here's the thing. A lot of other lenders have what's called overlays on their guidelines. So VA has like a clear path of here's what you can do. And they have some really cool stuff on there. Cool. Like really cool stuff on there. But a lot of lenders will overlay it because they don't want to take on the risk. So if they tell you no, that doesn't mean the answer's no. Then let's talk.
If they tell you no, that doesn't mean the answer's no. It means we'll probably find a yes. I've never seen you find a no. I'll be honest with you. It's been really difficult for you to find those.
Oh, yeah.
You're good at hunting out yeses.
We try to find those yeses. Yeah.
All right. So early in this broadcast, we were talking about how we're going to be discussing free money programs. Are we ready to move on to that? This is the juicy stuff. We know this is why you tuned in. It said free money and you said sign me up, right? So we don't want to make you wait too long. Wanted to remind you, this is a broadcast for you. So if you have questions for us, if you want to ask us anything at all, drop it in the comments box. Once we're done talking about a couple of new free money, is it more than one or one?
I put together the newest one.
The one newest, biggest, coolest, awesome, most exciting free money program. Once we're done talking about this, we're going to quickly jump into your questions and get some answers to you. Please know that we're going to be doing these, I think, every Wednesday. We'll be scheduling them in advance. So stay tuned on the channels. Wherever you're watching this, stay tuned, because we're going to be doing these frequently, and we're going to be covering specific subject matters each and every week to make sure that you guys are getting new information and that we're taking some of your questions and kind of going deeper. That's kind of the goal. We're going to go deeper in 2023. Are you ready for this?
Oh, let's do it.
All right, drum roll. Now, this is not the only free money program. We've done a few live streams where Amber pulls out a book and she's turning the page, and it's like, and then there's another one. And if you're a teacher, and if you're a service worker, and if you're this, and like she's rolling through this book, like the free money never ends. We're covering one that's really, really exciting for 2023. But keep in mind, we might want to try to include one free money program on each and every broadcast.
We should.
Everybody has to.
Because there's another cool one that we should probably do next.
We're doing it next week, but this week, drum roll, please.
Okay,
let's talk about it. Free money. Show me the money.
So this is a new one for Nevada, right?
I'm just gonna lean on in.
Okay, lean on in. It's called the Home First Down Payment Program. So what this gives you is, are you ready for this?
Drum roll.
$15,000 in down payment.
All right, I need to tune in really because I need to know if I'm qualified for this one. Let's go.
Tune right in. So $15,000 in down payment assistance. So a lot of times down payment assistance can go towards closing costs or down payment. This one is strictly for down payment. So
if you have no money in the mattress, if you've not been able to save, if last year kicked your ass like it did most of us with those gas prices, this could help you out. This could get you that money.
Yes, $15,000. So this is for down payment, and then you get the seller to pay your closing costs,
which we will do.
$15,000 completely covers your down payment. Like,
oh my God,
that makes it to where there's no money to commit.
Okay, let's go.
Right?
Okay. Let's go.
So then it's forgivable after 3 years. So you have to live in the house for 3 years.
Okay.
And then once you've lived there and you prove that you've lived there, then that $15,000 goes away. So
you don't truly free.
You don't have to pay it off. You don't have to pay it back. So they're going to give you the money and say, here's like a little carrot. Prove to me that you're going to live in the house, and then we're going to let it go away. That's amazing, right?
I have no words.
You look like you're about ready to cry.
I am. Keep it coming. I'm feeling like I've got some hope in my life right now.
Okay, so then it's on a 30-year fixed mortgage.
Which is what you want.
That's what you want. Yep. The rates are honestly pretty decent, too.
Okay.
And then purchase price up to $570,000.
So you could, okay, keep going. I'm just going to be quiet.
Exactly. You have to be a first-time home buyer. So which means that you can't have owned a house in the last 3 years.
So for those of you who get concerned about that, it also means that if one person on the loan is a first-time home buyer and the other one isn't, you can still utilize that as first-time home buyer. So if your spouse, your partner, whoever you're buying the home with has never purchased a home, but you're still in the running for this free $15,000.
Utilize that first-time home buyer right there.
What else you got? What else?
Minimum credit score 660.
That's pretty good.
That's really good.
And if you're below 660, this girl can tell you how to get above it real quick. Okay.
We got to pay down some
game plan, baby. Game plan.
There's a first-time home buyer education course.
Okay.
That you have to take, and it's pretty simple.
Cool.
Plus it teaches you good stuff, so you're good. And then you must fall within household income limits. So they're going to look at how many people are within your household.
Okay.
And then that's dependent on how much you can make. Like what I'm looking at is if you have 8 people within your household, the income goes up to $138,890.
So this is really, it sounds like geared toward not lower income, but beneath what I think the standard living income is, which is amazing. That's helping people who don't make a ton of money
get into houses.
Biggest
problem.
And what I love is because most of those people are the people who cannot, and I'm probably right in there, honestly, cannot save money, right? If the gas prices go up, there goes the money that they were putting away for a house, right?
Yeah.
So this is really geared towards those of us who maybe have never had the dream of buying a home because, and someone's trying to call me right now. I'm going to kill my daughter. Okay. Anyway, it's really goes for the people who, all right, let's see if that worked. Did we get back online? Oh my gosh. Let's see if it worked. This is what happens when you're doing a live stream. You're getting phone calls. Sorry about that.
But we're still live.
My daughter knows that I'm on this live stream. I think she forgot. Sorry about that, guys. Anyway,
that you're off right now.
What's really cool though is that it's really seeming to be helping the people who need the help the most, which makes me so happy.
It is. It really is. I talked to somebody the other day that they made decent money, but they have 7 kids.
Yeah.
Right. So like I was like that you fit. I'm not that everybody has to have 7 kids or whatever, but it was hard to save any money because food is a lot. When eggs were
like $9 recently. I was like, how much are eggs? I'm not buying any eggs this month.
I know.
What the hell's
no
going
eggs
on?
this month, right? But that makes it hard to save when all that stuff adds up on you.
I know. So this program is $15,000 of free money. If you fall outside of that annual income, don't worry. There are other free money programs available. I promise that'll likely
we'll trickle them out. We're going
to trickle them out to you guys each and every week as we go live. We're going to be mentioning a free money program and then speaking about something specific. So be sure to watch the titles and see if you're interested. But more so than ever, I think the goal of our continuing to broadcast to you each and every week is to be here to answer your questions, which we're going to do in a second, but also just to remind you of what's going on in the market from the people who are working in the freaking market. I'm stoked about $15,000 free money for 1 person, 2 person, all the way up to 8 people household. They've got different limits, so we'll see if you fit. Debt to income ratio doesn't seem to be
45%.
listed. Where is it? 45%.
Yeah.
And then I'm sorry, but the 660 credit score is doable. And, even if you're below 600, it's doable. You can get there. We promise. How exciting is that? That's amazing. Is this only in Nevada or is this available other places?
Well, this one's Nevada housing we're doing, but I mean, other states have their versions of it too.
Awesome. So there are a ton of free money programs. What I think also people don't realize too is that you can stack free money program with, I don't know, is that free money is essentially a grant, right?
And so we're going to do you want me to talk about the one I was going to talk about next week?
No, I don't. No, you're not doing that. No, we're going to save it. But I want to talk about how you can stack. So let's say you have $5,000 saved we can go and figure out how to get you whatever free money program might be available for you, whatever we can qualify you for, stack that with what you have saved. Then we can go and ask the seller or the builder or whoever to give you money to pay your rate down so that your rate goes down, so then your money goes a little further, or they can pay your closing costs, right? You can literally stack this sandwich or this cake and take a big old bite of it at the end of it because and get the sweetest, most amazing deal. And that's what people aren't talking about right now. A lot of people are straight cut forward. It's not a good time to buy. Housing's crashing, blah, blah, blah. Houses will be $40,000 next year. That's all bullshit. We're just telling you what's really happening.
People are saying that.
What's really happening is there are smart people who are actually sticking their neck out there. They're listening to the people who are doing this. If it's not good for you, we'll tell you it's not a good time for you. We promise.
And we have done that,
unfortunately. Yeah.
But and then I mean, I'm seeing momentum right now. Yeah. I'm seeing people listening. I'm seeing.
And my phone's been ringing off the hook since December 31st. I'm going to tell you that right now.
It has been like people are like, we're just waiting for January to happen.
Yep. So don't be on the fence, I think, is the bottom line. It is an amazing time to buy it, and it will be for a few months, but don't wait a few months. Talk to us today. That's the biggest lesson that I think people who wait too long to call us is the process of getting approved takes a minute. You got to get paperwork. You got to get stuff to everybody. You got to fill out a form, all this stuff, phone calls, setting up meetings. It's a process, right? That process can put you behind the ball if it's time for you to strike. If you find that house on Zillow and you're like in love with it, I want to go see it. We're not going to take you to see the house unless you've spoken to Amber or a lender and we've gotten you pre-qualified. Just not going to happen.
And heaven forbid there's something that you have to take care of on
your
assets,
credit or whatever.
Whatever it is. Right. So yeah,
don't trust Credit Karma thinking that that's what your credit score is. It's not. I promise you, it's absolutely not. Amber's going to be looking at a completely different score to qualify you. And these are just things that we come on every week to remind you of because we get sucked up into the cyclone of news media and here's how it's really done. And it's just not that way. It's not that simple. We simplify it for you on the phone and we make it customized to your needs. We only know how to do that if you freaking call us, right?
Yes.
Give me the rundown one more time on this free money program. It is so juicy and crunchy, and I just need to take another bite.
It really is. Okay. $15,000
free towards your
down payment. Oh. That's a lot. That's a lot. I haven't seen that in a long time.
Okay. What else you got?
30-year fix. You could purchase up to $570,000.
Wow.
Within that, income limits apply. Debt ratios are 45%.
Wow.
Credit score is 660. Let's see if you qualify for it.
Oh my God. And you only have to stay in the house 3 years. 3 years, you never have to pay the money back. 3 years.
3 year goes.
That goes by fast.
We were just talking about the last time you bought a house. That feels like a blink, right?
It was a blink. All right, we're going to stop harping on it. That's our free money program for today. What's it called again?
It's called Home First Down Payment Program.
Home First. So if you want to chat with Amber, click the link in the description. We'll have a phone call. We'll get you set up. We'll dial you guys together. Don't forget to mention this, but don't worry. She's going to have it in her back pocket for you as well as her other book of amazing free money and free grants. We're going to go now to answer your questions. So if you have specific real estate questions or lifestyle questions, or you want to ask me out on a date, let's go. Let's go. Now is the time. Drop it in the comments below.
Let's see the date questions.
I'm sure they're coming. I'm sure they are. Pollock says hello from Pittsburgh. Laci and Amber, hello, Pollock. Good to see you. Sammy says, hey, love. Good to see you. Happy New Year, guys. Hello. Lawrence says hello from Durham. Oh, my God.
Durham.
Billy. Hey,
Nice.
Billy. Oh, hey, Lisa, my bestie in Vegas needs this. Billy, please have her call me. You have my cell phone number. Billy lives in New York City.
Oh.
I hope you still live in New York, in Brooklyn. And she's lovely. I met her, believe it or not, on an airplane like a long time ago, like 15, 17, 18 years ago, probably. I don't even know.
Wow.
So good to see you, Billy. Thanks for joining us live. I love you, love you, love you. Let's see. Jake Gallen says, I love your thumbnails. I did do a fun thumbnail this week. All right.
I haven't even seen it, so I need to go look at the thumbnail.
I know. All right. Pollux is asking a great question. Has anything changed as far as work history requirements go? Can we walk through what work history requirements are for most loans?
Yeah, for most loans, you have to have 2-year history in the same line of work.
Right.
So
not the same job. Right.
Not the same job. So a lot of people will mix that up and say, well, I just started a new job. I can't do it. No, in the same line of work. Though where we've run into problems is that some people will say, well, I worked as a W-2 person in this line of work, and now I'm a 1099 person in the same line of work. You have to go W-2 to W-2, right? You can go 1099 because that's self-employed to W-2, and then you're okay.
Got it.
But not the other way around.
Okay. Got it. So that's pretty much the requirement. So if you don't think that you know the answer to that, because I've even asked her some very tricky questions and she answered me more positively than I expected. So please just speak to us, like talk to us. Don't think you just figured out, oh, well, I worked this job and then it was this one. listen, where there's a will, there's a way. Okay. And we will make sure we can figure it out. There's nuances within jobs and industries and changing industries and moving to new cities. She's just going to shake her wand. Yes. All right. Let's see. This is a good question. Carrie says, how do you get rid of PMI? Even if you put down $20,000, do you have to have PMI? I think is what she's saying. We have a government program who paid our $20,000 down with the parameters that we live in the house for 3 years plus other stipulations. So let's answer the question about PMI and then.
Yeah, that was an amazing program. If you got the government program that gave you
$20,000,
Carrie. Very few people got that. So good job. But those programs are done on FHA loans.
Okay.
So FHA loans have mortgage insurance for the life of the loan.
PMI is mortgage insurance for those that are tuning in, right?
But the good thing about that, the loan that you received, is that even though it has mortgage insurance on it, because the rate was so low, your payments probably lower than what it would be if you refinance conventional.
Nice.
So what you want to do is kind of keep listening into our live streams that we have, and we'll tell you when rates start to go down, because you're going to want to look for a refinance later on to refinance onto a conventional loan. That's how you're going to get rid of the PMI.
Right.
But you'll want to wait till rates are to a point where they're going to be better than what your payment's going to be better than what it is right now.
So is that the only way to get rid of PMI? You refinance off of it
or an FHA loan?
On an FHA
conventional loan, it should fall off after you have 20%
of equity.
After you've been in the house 2 years and then have 20% equity.
Meaning the house has gone up in value more than 20%, right?
Yeah.
Or at 20% or
yeah.
more.
Yeah.
Good question. Congratulations,
great
Carrie. Awesome. Okay, Pollux is saying he drives for Uber or for Lyft and Uber, but his driving has been inconsistent. But that shouldn't have anything to do. That's more income. That's not industry, right?
Yeah. Well,
he's been
as far
driving
as the
Uber
2-year history, if you've been driving for Uber, and then you're good. As far as the 2-year history, if you've been driving for 2 years. But with Uber and Lyft, it's a 1099 job, like self-employed. So you can write things off in your taxes on that. So we have to look at your tax returns to see what you filed in income, and it's bottom line income. It's after your write-offs on that one.
So if you drove three days a week last year and you're only down to 2 now, that's gonna have an effect on like income levels, but it's not gonna make it look like you haven't had a job, I guess is what, because it's a 1099. As long as you're still doing it, you've been doing it for that 2 years.
Yeah, you just have to have it for 2 years.
Good question, though. Really good.
I love the questions.
I love this too. Okay, let's see. Hi, Kurt. Hi, ladies. Sometimes I watch Chuckett's, a realtor in Vegas. I love Chuckett's. He's a great guy. All he ever shows is homes that people can't afford. I know it's about commission, but you guys are amazing and for helping folks. Well, thank you, Kurt.
Thank you.
You know, there are a lot of great realtors here in town, and there's a lot of really good YouTubers as well. We've done a fair kind of mix of all of it. But the thing that Amber and I share in common and why we choose to work together and work so hard for you guys and show up as consistently as we can is because we believe in the dream of home ownership for everyone. You know, I could very easily, with this amazing face and also our online presence, go and just be a luxury realtor, right? And that makes my job a whole lot easier. I'm dealing with very small amount of people, higher commissions, less work for me. That's not really our goal. Do we work with luxury homes? Absolutely. We've sold custom homes. We sell commercial real estate. We do it all. But what pumps my heart and what pumps your heart and what makes us smile at the end of the day is being able to help anyone who needs our help. Whether you're a luxury person, you're a cash buyer, not with her, unfortunately, but with cash buyer for our team, whether you're someone who can barely scrape it together, which I've been in that situation before, for someone who's, you know, on fixed income, if you're on SSI, all these things, we want to make sure you know it is possible. Thank you for your compliment. We really appreciate it. Chuckett's is awesome. His tours are great. We do home tours as well. I'll be doing more this year, so stay tuned for that. And we are really trying to show as much as we can. I will preface it by saying this. If you love home tours, be aware that home tours online are going to be one of two things. They're going to be a home that the realtor you're watching is selling. So who knows what the price range could be. It could be up, down, left, or right. But the majority of realtors, including myself, love showing model homes because it sparks the dream. But also model homes are typically more expensive than the homes that you might be selling, right? The resale homes. So just keep that in mind, but keep watching Chuckett's, keep watching us. If you're ready to buy though, Kurt, I expect a phone call from you because we are here to help you and anybody else who absolutely needs our help, whether you're a $1 billion buyer or you're someone who can, who's $8 an hour and can barely get there, but is just pushing for that dream. We want to make sure you can make it happen.
Yes.
Thank you for your compliment. That was amazing. Let's see. Lilo says, all these rates you're mentioning, are they based on fixed rate loans? Are they teaser rates for ARMs? Good question. Good question.
You guys are amazing today. No, these are all fixed rate loans. When you're talking about grants And I mean, we haven't even mentioned rates.
We don't really quote rates because they change minute by minute, right? We're very careful about that. However, the loans we're talking about have fixed rates attached to them.
They have fixed rates attached to them. So but when you're talking about the grant program, those are always going to be fixed. There's no arms in a grant program.
Good. That's a really good question. Really good question. All right. I would be a first-time home buyer. Thanks, Scott. I would be a first-time home buyer with a 798 hello and 2% usage at least according to Credit Karma. What are my options? Scott, your option number one is to click the link below. And if you don't click the link below, Scott, we're going to have a hard time talking to you. No, seriously, though, you're amazing. Congratulations.
Your credit score, good job. I mean, it takes a lot to get to a 798. You had to work hard at that. So congratulations on that. We also have to look at like debt to so when you're talking about 2% according to Credit Karma, that's what you have right now. So what we have to look at is your income and then add a house payment on there to see what you qualify for, you know, and depending on what program you're wanting as far as like down payment and stuff. But as far as your credit's concerned,
congratulations.
You look good. Now we just got to fill in the rest of the pieces to the puzzle.
And I'll preface this, Scott. So Credit Karma may tell you that you have a 798. It might be higher. It might be lower, but it might be higher. It might be a lot higher. Yeah. We just don't know. So calling us is going to be the best step forward into actually checking into what we can do for you. And the other thing is, you know, Credit Karma is a very different system and does not always show what these guys actually are using to qualify you for a loan. It's very different. And the most accurate version is going to be with you.
Yeah, because what they're doing is they're pulling a different version of credit that actually has different rules on it and different ways of calculating your scores. But to be able to see what you qualify, to see what you can get you into, let's talk so that we can kind of run all those numbers and then fine tune everything to get to a payment that's affordable for you.
Congratulations. That's awesome. Great question. Alan says, can a VA loan go to a surviving spouse? Great question. I actually was going to ask this question myself the other day. Can it?
Yeah. So actually it can but you have to go through VA to fill out all the paperwork. So from what I've been told by VA, and this could have changed, it's been a little bit since I've talked to VA about this, but if the person that had the VA benefits passed away because of something that was military related, then those benefits get passed down to the surviving spouse. But you have to go through a process with VA to be able to establish those benefits. I had one client that had her VA benefits. It did take her some time to be able to set up the surviving spouse benefits. So you'd want to reach out to VA, see what the process is to get that started, and then to see how long they're taking right now.
Good point. Good question. Thank you, Alan. Chris M. Hi, Chris. Good to see you as always. Been driving from Minnesota to Lake Las Vegas for the last couple days through a snowstorm in the Rockies. 2 hours left to go. Time for Laci to show me around and get drinks. I think that's a date request. Chris, I've been teasing you about a date for a long time. So please reach out. Let us know when you make it to Vegas safely. Please be careful. And congratulations on finally making your way here. This is going to be a super awesome experience. Awesome. Angie, hey Angie, she says we are a great team.
Love
you, Angie. Brian's asking, is 40% debt to income ratio good?
That's great.
Brian, if that's your debt to income ratio, we better click the damn link below, for crying out loud. That's amazing.
Just remember, debt to income ratio that I'm going to look at for a loan is going to include your debts plus the new house payment divided by your income. But if you're 40%, yes, let's get you in a house.
Some room to move. That's a wiggle room. I love that. Brian's also saying we make $13,500 a month. Can we get a 4-bedroom house in Green Valley with 3% down for $650? So 3% down would be a conventional loan, right?
3% down is a conventional loan.
Right.
I mean, it sounds like your income is very good.
Yeah, congratulations.
You know, I mean, everything that you're putting on here looks really good. We would just have to, you know, run your credit scores, run the debt ratio, because we have to also see what's on the credit as far as your bills go, and then run the payment for you. Your payment's going to depend on what your FICO score is, but everything that you put on there, I don't see, like, without knowing everything. It all sounds good. So I think it's worth making a phone call.
I'm pretty sure, Brian, we need to be speaking to you soon. Yeah. I love this. What's the number for a single senior on a fixed income? What's the number for a single senior on a fixed income? Like in terms of like loan amounts, that's probably what she's asking. Like if you're, how much could we get?
It depends on how much income you have.
Income is, right?
Yeah. And remember, when you're on a fixed income, like say you're just on Social Security, if you're on straight Social Security, a lot of times you don't have to pay taxes on it. So whatever you're bringing home, we can add a lot of times up to 25% to that income to be able to help you, because you don't have taxes coming out of it. And but it depends on how much your bills are that show up on your credit report, what your credit score looks like, for me to be able to see how much you can qualify for.
I love that. This is a really good one.
Yeah.
Jamie is asking, what is the definition of a first-time home buyer? If you haven't owned a home in 10 years, would that qualify? I'm asking because sometimes the definition is not straightforward. Ain't that the truth?
Yes.
Okay, let's get it.
And they change it. They honestly change, like program to program changes it. But what they're more looking for is if you haven't owned a house in the past 3 years,
boom,
then you qualify for the first-time home buyer program.
And you probably qualify for some first-time free money, and who knows, right?
Yes.
That's the thing that I love is like, especially first-time home buyers, there's always a sense of extra being given, which I think is really exciting.
Yeah.
So Jamie, I'm going to say it again. I'm going to say it after every question. Click the link below. Let's talk. Let's talk.
And after 10 years, I'm sure you're tired of renting. Let's get you in your own house.
Or tired of your first home. Let's get you out, rent that out, and get you back into a new home. Leolo's asking, does that Nevada free money program that we talked about earlier have a residency requirement? Can people moving to Vegas from out of state apply for it? And what's the income for a single person?
That is a great question.
Great question.
I didn't have that on the thing, but they do have a residency requirement of 6 months.
Oh, that's
so
not
to
bad.
do that one, you have to. But there are other programs where you can move from out of state here and do it right away. But this one does have a residency requirement of 6 months. Great question.
And then can people moving to Vegas from out of state apply for it? Probably not, unless someone's already residing here that's going to be on the loan, right, for 6 months.
Yeah, we would need to be able to show that you're residing here,
and then,
unless you're planning on like coming here, renting for a little bit, and then buying the house. But you have to be here 6 months for us to close the loan for you.
And what's the maximum income for a single person for this program? Just this program, though.
So just one person in the household. It's $40,770 if you only have one person in the house.
But if there's more people who live in the home, that goes up, right? So don't let that deter you if that's something that's below what you already make. If
there's other programs. Remember, we just went over one program. There's another program that you could have like up to, it's like $84,000.
Yeah,
so
nice.
There's a couple more programs to look at.
Wasn't it 184? I think so. Up 4 people. One of you're saying the other one?
The other program, because remember we only discussed one grant program today.
Sorry,
so don't if you don't fit within this requirement for just one person, then let's look at the other grants and see if you fit within those.
Brian's asking, what's for this program, Brian? What's the max for 5 people living in a home?
You're asking such great questions. So for 5 people on this program, it's $97,410.
Nice. So again, guys, this is just one program. Don't be deterred. There are free money programs. This is just the hottest biscuit off the oven. We're just excited to show you.
One, yeah.
There are other programs that are available that are as juicy and crunchy as this one. So don't let these income limits deter you. Please still reach out. We want to make sure we walk you through. Again, like I said, Amber's got this book that goes for days, and I'm like, give me more.
We're gonna go through your file and say, okay, do you fit into this? Do you fit into this? Do you fit into this? So yeah.
All right, let's see. We've got the ladder rate. I'm moving back down to Henderson in June. Do you already have to be a resident there to qualify for the free money program? So I think we just walked through that. So 6 months residency is required.
But in Clark County,
in Clark County, yeah.
So if you're already here, I don't know if you're moving from somewhere else.
Yeah, it depends on where you're moving from. But keep in mind, this is just one program. There are other programs available, and just give us a call, because there's, I'm sure, ways. We just have to prove that you've been a resident for 6 months. So we can certainly have a conversation that I will not speak further about how we do that. Okay. Gordon Bishop says, howdy, howdy, howdy. Hey, Grodin. Hey. Hello. Let's see. Oscar says, just got back from rainy Vegas to rainy Seattle. Sorry,
you
Oscar.
brought the rain with you,
Damn you. Chris M says, Credit Karma says mine's 808. 808. I'm hoping that's not too far off. Okay, let me ask you this.
It might not be, but I've seen, this is how far off I've seen it.
Oh, God, don't dare him now.
I've seen, well, no, I mean, it might not be. Like, sometimes they get close, but sometimes I've seen them like 100 points. I'm like, what, are you just not looking at things?
Oh, my God.
But I've seen them 100 points good and 100 points bad, though.
Yeah. So let me ask you this. Okay, Chris M., who I'm apparently going on a date with at some point soon. Chris M. has, let's say, Credit Karma says 808. Let's say you run it and it's 790. Does that make that much of a difference?
No, it makes no difference. Actually,
so when does it start making a difference?
Over 740, you get the best of everything.
Okay, so if you're above 740, hallelujah, high five yourself in the mirror and smile on the way to the bank, right?
Yep.
This is all good. Below 740 is when the rates start to waver and things start to get a little bit different.
Yeah.
Okay. Get with it. And Chris has 808. He's looking better and better by the minute. Okay. He also asked me to go to like a festival last year, and I'm still waiting for that to happen. So.
You have such a good memory.
I do. I know. Well, when someone's asking you out repeatedly, you can remember. Hello. JF says, if you have 3 years at the same job, but also started a side business that has produced income for a year, does the side business income make a different? What a great question.
Yes. So, okay. The first job you're okay, but to have 2 jobs, because when it's a side business, it's considered a second job, right? So you have to have 2 jobs consecutively for 2 years in order for us to count the income. And if it's a side business, you want to be making sure that you're showing an income on your tax returns, because if it shows as a loss,
then it weighs against you.
It weighs against you, yeah. But if you're showing as an income, you have to wait 2 years before we can count that income as income on the loan application.
But here's what I would say. First of all, congratulations on starting a side hustle. I'm a get shit done kind of girl. I'm super excited about that. Love an entrepreneur mindset. Don't think that you need to wait, because here's what's awesome is getting into a home with your first income. You've got a job for 3 years. Awesome. You got income. Get into a home. Take advantage of some of these. Maybe your income fits into some of these free money programs. Get free money while you're building that side hustle business. Then after whatever the requirement is to keep that free money goes away, then you can qualify with 2 incomes and buy the bigger home of your dreams, and then rent this one out and let this one pay for that one.
Think big, man.
It's how you start building that empire. So don't wait for those 2 years to do it. Start incrementally moving towards it, so that by the time that 2 years is up, or maybe 4 years, whatever that time takes, both of those incomes match, and you can use them together to buy the bigger dream of your home of your dreams. And then the one home that you had already purchased was one of these amazing programs you can maybe rent out, right? I just want to repeat it. Make sure you heard me the first time.
Okay? Yeah, I love it. Or take the money from the second job and put it at, like, start paying your bills on that one.
That's another way.
Start paying down your bills, saving money. There's a lot of different ways to maneuver it.
Kurt says, thanks for the info. I appreciate it. Kurt, we appreciate you. And congratulations again on your amazing credit score. All righty. Let's see here. If you have let's see. What's the best way to find out? JF says, find out if a condo or a townhouse will allow an owner to do STR or Airbnb. I'm going to just tell you right now, none of them are going to allow you to do Airbnb. It's just not.
Because they're in HOAs, right?
They're within an HOA, and most of the Airbnb licensing requirements in this world that we live in Las Vegas, do not allow, you can't be within an HOA. Here's what we will say though. Please visit my channel on YouTube and poke around, because I've done some other videos where we're trying to help you guys work around the system a little bit by doing like 31 days or more. Short-term rentals, they become non-short-term rentals after the 30-day mark. So if you could find travel nurses that want to rent your place, if you could find, somebody who is coming in for a conference and needs to be here for a month to set it up, or someone moving here that is building a home and waiting for it to be finished, right? Things like that. We got a lot of that.
Because then it's like more than a month, and you're getting the top rent.
You can do whatever you want.
Smart. Right? I love how you guys are digging into it.
Condos and townhomes then it turns into you're renting the home out, and that's a totally different ballgame, totally different set of rules. And you don't have to worry about getting licensed for Airbnb, which is very hard to come by. And you don't have to worry about fines. And you can still advertise on Airbnb and on VRBO and all the awesome websites. So there's videos on my channel. There's an Airbnb playlist. Go to the most recent videos.
I know. I love how you guys are really digging into it.
We're trying to help you guys out. Like, listen, we want people to invest their money.
If people are smart, they buy an Airbnb in Vegas.
Hello,
right? What better place?
The new rules that have come out for Airbnb are really killing people's dreams, because they're like, it's a lottery. I can't be within 600 feet of the other person. Can't be in an HOA. I have to live in the home. I can't even just rent the whole place out. Like, it within unincorporated and incorporated Las Vegas. Listen, those hotels don't want you guys.
Those hotels that bought the politicians.
Those hotels do not want you to be doing Airbnb. So let us help you think through it. There are a ton of people that come here for work for short periods of time that will need more than 30 days. And you can still do marketing on it, and you don't have to lock them down for a whole year. Some of those Airbnb rules, literally, you have to live in the home. You can't go on vacation while they're being rented. I don't know what they're going to do to monitor you, but like they say you can only go to work and normal, typical errands while you're doing it, and you have to be in the home. Like, what's
How do they monitor that? That's crazy.
I don't know. Nosy neighbors monitor it. Nosy neighbors monitor it. Or
depending on the nosy neighbors.
Guess where the nosy neighbors work, who want to keep their income flowing? The hotels, who don't want the Airbnb. So just FYI, please let us help you be educated. We're in it. We have dug into the laws. We know what's what, and we want to help you guys figure it out. Okay, great question though, JF. Great question. Okay, let's see. Pollux, if you own a mobile home, does that disqualify you from the first-time home buyer program?
So mobile home, like if you already own a mobile home, if it's considered real property, if it's like real estate, if it's not attached to the ground, it's not real estate, it's an installment loan. But if it's considered real estate, then that would be, you already own a house.
Right.
But one thing I didn't mention is this free money program, like this grant program that we're talking about.
$15,000 of free down payment money program. Yes.
It does do manufactured housing too.
Awesome.
So if you're going to buy a manufactured house, that's also like it has to be real property, so attached to the ground.
Yeah, here in Nevada, when you do purchase a manufactured homes, it's kind of required that the property connected to it, if it hasn't been done so already, is converted to real property. So the house and the land are one, essentially, when it comes to how it's lended on and how it's sold. The ownership is one thing, right?
Yeah, there's a conversion process.
That's a really great question. Are credit unions more lenient in terms of approving loan amounts?
I don't think credit unions are more lenient in anything.
I think they're less lenient.
Yeah, actually. They would have more overlays because they're held to. They have different,
more of a risk for them. Right?
Yeah, they have different. But what credit unions do is from what I understand, I can't say I'm an expert because I've never worked for a credit union before, but they get their money to lend from people that put their money within that bank, right? So then they have their own they have their own rules to be able to do it, and sometimes they are more strict with them.
Is stricter even a word? Or stricter? I don't think so. It's more strict.
Sounds good.
More
strict.
It sounds good. I did not fail English. I'm just failing it today. All right, guys, so excited. Got JF, Brian, Oscar, all of you guys who are watching us today, please consider just reaching out. We just also like making new friends. So just call us. We are a low pressure experience. I don't feel low pressure on these videos because this is my one chance with the megaphone to tell the world. But we really don't care if you buy now or in 10 years or never. But we do want to make sure that we answer your specific questions. So thank you. All right, let's see here. Joe Sullivan, I get so hyped watching you ladies, but can't move to Vegas from the frozen hellscape of upstate New York until 2028. How can I contain my excitement for 5 more years? What an amazing question, Joe.
But we love you for saying that.
We love you. Joe, have you considered possibly investing in Vegas? So when you do come to visit, because clearly you're going to come and visit us over the next 5 years, maybe consider investing in a home in Vegas as a second home or an investment property and doing some of the rental stuff that we talked about so that you already have an investment working in your favor. And if you work it out like an Airbnb situation, like we just talked about, 30 days or more, when you come visit, you stay for free. So your trips are cheaper. You have a home in Vegas that's working in your favor. It's putting money in your pocket. We can help you figure out all the situations.
I think it sounds amazing.
I think that's what you need to do to contain your excitement. Because that also not only will help you contain your excitement, it's going to help you experience more of Vegas because you'll be able to visit more often because your trips will be cheaper. There you go. Fixed it. Solved the problem. You're welcome.
I think Laci's plan is great. Let's talk, Joe.
Let's talk, Joe. Seriously, Joe. And even if you aren't considering doing that and you don't have the money to do it, I'm telling you right now, there's probably a free money program that might help you, but just call us anyway. We'd love to chat with you. And I love that you are dreaming about Vegas. And I'm sorry that you live in a frozen hellscape. I'm so sorry. All right, let's see. Angie says Miss Kravitz, the original Karen. I don't know who that is, but okay. Leolo, thanks for answering my questions. Your live streams are good sources of information for people considering to move to the Vegas area. Leolo, thank you so much.
Oh, thank you.
You guys, we are so excited to be in 2023, to have kind of a new lease on life this year. What do you think?
I think it's amazing. I mean, honestly, I think I say this every year, but I was extra excited to walk into 2023 for 2022.
Yeah, 2022
was a major roller
coaster. I left a lot of baggage, about 169 pounds of baggage in 160 about.
Oh, I'm glad you counted
baggage.
Love it.
And then and that's in human form. And then the rest of the baggage I left is is whatever. But super excited for 2023. And the biggest reason I'm so excited, and I know you are too, is that there are new free money programs. There are lowered FICO score requirements. There are higher loan limits. There's people out there wanting you to buy homes, right? The news media, I love them for a lot of things. I don't love them when it comes to real estate because they almost never tell the truth or tell the right story. It's always a clickbait angle. We are here. We do this every single day. And I'm going to put my hand on the stack of your Merlin hat or Bible or whatever is in front of me to let you know that we
put your hand on my hat.
I'm going to predict. That we are truly going to see an unprecedented opportunity for buyers to land a deal. And that's the one thing that buyers say to me is, oh, well, I don't care what market it is. They always want a deal. Who doesn't want a deal?
Right now is the deal time.
Now's the time. So like our friend Brian, who's considering moving here in 2028 from the frozen hellscape of upstate New York, you don't have to wait. You may not have to wait. And I promise you, if you get this girl on your side to start the process and you get our team on your side, we will make it happen. We're going to make it happen.
We seriously will make it happen.
And there's no judgment. We're freaking fun to hang out with. So why would you say no? That's all I'm saying. So
I love it.
We hope you got excited about this one free money program that we shared with you today. Please tune in next Wednesday. We're going to be sharing more free money programs with you and also debunking some really ridiculous myths about this freaking real estate industry that we decided to freaking get our lives into.
I can't believe the myths. Sometimes when I talk to people, I'm like, what? Where did you hear that
you
from?
think you know, but you have no idea.
You
We've got some major myths that'll be debunked next week. We're going to be answering your questions again, so stay tuned, and of course, stay to the end. Drop it like it's hot. We'll answer your questions. I'm just stoked. It's 2023, baby. Let's go.
Happy to be here.
Happy New Year. High five to all of you.
Yes.
High five, high five, high five. Thanks for always tuning in, and we'll see you next week. We'll talk to you soon. Bye.